We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries.
President Trump there speaking with European Commission President Ursula von der Leyen after securing his latest trade deal, this time with the EU. I'm Paul Allen, live from Sydney. This is Inside, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, US and European stock futures pointing to gains after that US-EU agreement. China looking to extend its trade war pause in talks with the Trump team today in Sweden. We're going to look at the EU deal, also the China truce and the market impacts with our panel of experts. We're joined by Trade Partnership Worldwide President Daniel Anthony, joining us along with the UBS Global Wealth Management's Asia Equity Strategy Chief Suresh Tantia. Also ahead, fighting continues as the leaders of Thailand and Cambodia prepare to meet, trying to end their deadliest border clashes in more than a decade. And we're live at the World AI Conference in Shanghai, hearing exclusively from Alibaba Cloud founder Wang Jian about China's ambitions for the technology and the sector's big money talent wars. Let's get to our top story today. President Trump securing a tariff deal with the European Union. The hard-fought agreement sets lower than threatened 15% levy on most of the EU's exports. European Commission President Ursula von der Leyen said the deal brings stability and predictability, and that's important for global trade.
It's a good deal. It's a huge deal with tough negotiations. I knew it at the beginning, and it was indeed very tough, but we came to good conclusions for both sides. So again, congratulations and many thanks.
Well, despite the optimism from both sides, Trump and von der Leyen appeared to differ on some key details. Trump says the agreement does not cover pharmaceuticals. Von der Leyen, though, says otherwise. Trump also says the 50% tariff on steel and aluminium stays the way it is, while von der Leyen maintains that the metal tariffs will be cut. Well, aside from the EU, the US is also working on securing a deal with China. Negotiators from both sides are to meet in Stockholm later on Monday for a third round of talks aimed at extending a tariff truce and widening discussions to include Chinese oil purchases. Well, let's take a look at how markets are reacting to that news of a deal. In the case of Europe, very positively. We've got Euro stocks futures currently better by about 1% at the moment. DAX futures, it's a similar story there. We've got the euro gaining ground as well, 117.54 at the moment. So the EU, must be worth saying, didn't need to move on VAT. That was a potential sticking point, but it's going to see potentially $600 billion worth of European investment in the United States. However, details of that kind of remain vague as well. But the market generally positive that the $1.7 trillion or so cross-border commerce between the EU and the US appears to be safer from a wider trade war. Take a look at the other side of the board there, though, seeing a little bit of weakness in Korea. Elsewhere, though, the Hang Seng better by about 2/3%. We've got Macau casino stocks performing particularly well. All right, let's get some more on the market and economic impacts of the deal. We're joined by Suresh Tantia, head CIO for Asia Equity Strategy at UBS Global Wealth Management. Also with us, Daniel Anthony, president of Trade Partnership Worldwide, an international trade and economic research firm. Dan, I just want to start with you. When you run your eye over the deal, as I mentioned, there's still a few areas of disagreement. What's covered, what's not, a little bit of uncertainty as well around that European investment in the US. But overall, who would you say got the better deal here? Because the EU's now facing tariffs that they weren't a year ago.
Yeah, and I think it's pretty tough to say without seeing all of the details. We've seen this with a number of the announcements so far where the actual terms of the deal haven't been released, and so it is tougher to say. I think the avoiding those higher tariffs come August 1 is a big deal. It's almost $1 trillion in goods trade, where you could have seen real tit-for-tat retaliation. So that is a positive for both the U.S. and the EU. But things like pharmaceuticals, where, as you noted, there is some disagreement as to whether they're covered or not. Those are huge details that are still unknown.
Yeah, in terms of pharmaceuticals, Ursula von der Leyen said, her words, that's on a different sheet of paper. Is a more global approach going to be needed here? Because this is something that concerns Australia as well. What's the path forward look like in your view?
Right, and so you have a separate review that's going on in the United States on the national security implications of pharmaceutical imports. As a result, there haven't been any tariffs to date imposed on those products, and so I think that's going to complicate the analysis. Just looking at imports from the EU so far this year, they're about twice as high as last year. So you've got a lot of front running of product that's coming in as long as there's no tariffs. But, you know, 15% versus the president has floated up to 100% tariffs on pharmaceuticals. I mean, that is a big difference in a key detail that we still need to see.
Dan, just hold it there. I want to get to Suresh as well for his analysis of some of the market action that we're seeing off the back of this. Suresh, obviously, as I mentioned there, we've got European futures in strongly positive territory at the moment. To what degree, though, does this say to you a relief rally? How durable are the gains that we're likely to see today?
I think certainly it's a good news for the European economies and on the European assets. So you should see futures rallying higher and a reaction in the FX market. Because earlier they were concerned that tariffs could go up to 30%. So given that we have certainty and lower tariff, markets would react positively. But within the equity market, I think you need to be more selective because markets are already pricing in a lot of the good news. And given that we are heading into the summer season where the equity market tends to be weaker, so you need to pick the stocks and sectors even in Europe which could benefit from this trade deal. I think the bear reaction you will see is in the FX market. So we have much higher conviction on euro going higher. Right now it's around 117, but I think by next year it could go to 123 against US dollar as Fed keep cutting rate and the good news on the trade front support the currency.
Yeah, in terms of the Feds, I mean, obviously higher tariffs are going to be higher prices for imports in the United States. When do you see this starting to feed through perhaps more dramatically in the data in the US, and what are the implications for the Fed?
Yeah, so from a growth perspective, so far the growth has been healthy, but I think it's been because of the front loading of the export-import. Given that there still remains some uncertainty, you would see some slowdown in the economic data. This year, we are looking at a U.S. economy growing at 1.5%. On the inflation front also, we don't expect a major pickup in inflation, given that tariffs mostly will settle around 15% for most of the countries. So managed inflation and slightly lower growth would provide a lot of ammunition for Fed to keep cutting rates. And we know that a new Fed governor is coming up next year, so that could also influence the Fed decision. That's why for the next 1 year, we see Fed cutting rates by 100 basis points, and that should support the bond market.
Dan, I just want to take it back to you on the subject of price pressures in the US. I mean, we often hear of President Trump hailing these deals, talking about how much other countries are going to be paying. But of course, it's not other countries that pay these tariffs. How much understanding is there in the US that it's consumers and companies in the United States that end up paying for these through higher prices for imports? Is that well understood?
I think it's not as well understood as it should be. I think we are entering, though, a real-time experiment where a lot of people may understand this a little bit better by the end of the year. You look at something, I've got a pizza place that's right near my house, and they really pride themselves on using all Italian ingredients. So the wheat, the tomatoes, the cheese, it all comes from Italy. And you're now looking at, assuming they're not on one of these as yet unpublished lists of products that could get lower, you're looking at 15% across the board. And so between currency fluctuations and the new tariffs, those are really large costs that most businesses in the U.S. don't have that ability to absorb. And so you are going to see those price impacts. And then it becomes a question, there's a debate on sort of the economics of whether they will be inflationary. But I think it's more about what sort of trade-offs are the consumers forced to make if pizza prices go up? Do they do dinner or something else instead of dinner and something else? And you're going to have these really factoring through on a lot of products. We've started to see increases on things like coffee, fresh fruits, and so you're going to have a lot of different tariffs hitting products from a lot of different countries all at once. And it's how those pressures really feed into each other. It's not necessarily inflation in the sense of everything's getting more expensive, but reducing demand for products that are viewed as less necessary or services that are viewed less necessary, and the impact that has on those industries. So it's a little challenging to read. There's a lot of conflicting data. Most of the companies that I've heard from have said that it's going to really be late summer, early fall before you start seeing these price impacts, and they're going to start coming quicker. But I think a lot of people were waiting to see what was happening or what would happen on August 1. I think the deals that have been announced recently show that we seem to be re-benchmarking to a 15 or 20% minimum tariff, which again is maybe better than some of the rates that we saw announced in April, but certainly going to add a lot more cost pressure than what we've had for the last several months.
To what degree, though, and this is part of the intention of the tariffs, do you see them helping U.S. companies and manufacturers become more competitive domestically?
It's a mix. It's going to be very company and industry specific, and so you've got these real competing goals here. So we want to bring back domestic manufacturing, but we're also raising costs on a lot of key inputs. And so if steel is more expensive, if aluminum's more expensive, if copper's more expensive, if auto parts are more expensive due to these tariffs, the United States really becomes a high-cost island for production, which undermines that ability to export globally or even sell competitively domestically. Making more here doesn't mean that the consumers have the money to purchase that more expensive version of it.
Suresh, I want to get your view again on how this informs your investment strategy. We've got the S&P back hovering around record levels, and it's off those trade-inspired chaotic lows that we saw earlier this year. Do you have a fresh year-end target, or is volatility going to be the name of the game for the second half?
You're absolutely right. I think volatility is going to be the name of the game for the second half of this year. I think in the short term, markets are going to digest these gains and the news flow that we have seen. Valuations certainly are not favorable at this point of time. Although the earnings results have been good and the deal news flow is certainly positive for the equity market, but given where the valuations are and unfavorable summer seasonality, I think short term you could see some consolidation, some profit booking. So we are advising clients and investors to prepare for this volatility in the next couple of months. We are, from a medium-term perspective, we are still positive on the equity market and still see S&P going higher next year to 6,500. But certainly from a short-term perspective, you are likely to see some consolidation.
Well, we've got the US and China also today likely to agree on an extension to those talks. I mean, does that give you any sense of optimism? And are you making any reallocations on that basis? Is China looking like it could hold some opportunities?
Certainly, China is looking much more interesting right now because we entered the year with a lot of concerns around the geopolitics, but now it seems like it's taking a back seat. Most likely, we should see extension of the August 12th deadline between US and China, and that's going to be positive for the Chinese equity market. But within the market, the problem is that the domestic economy has been struggling. We have not seen any meaningful recovery in the property prices and consumption. So what we are advising clients is to stick with the secular growth stories. China tech. We are seeing a very strong demand for AI acceleration in China, and with the World AI Conference in Shanghai going on this week, it will again put the spotlight on the sector. So within the equity complex, China tech remains our highest conviction idea.
Dan, the China trade deal is an interesting one. We are likely to see that deadline pushed back again today, as just mentioned there. Does that suggest to you that, considering how harshly other trading partners are getting treated, that China's got a much stronger hand to play here, particularly when it comes to its dominance of rare earths?
Yeah, and I think that's something that is a little bit shocking in all of this. If you look back at the last, 5 to 7 years, the reducing reliance on China has really been the one bipartisan trade issue in the United States. And so a lot of U.S. companies have shifted their suppliers outside to other Southeast Asian countries. And you're actually in a strange situation now where, and again, I've heard from multiple companies over the last week who shifted out of China and into Cambodia. By next week and into September and October, it seems that you could have bigger tariff increases on Cambodia than China, and really sort of punishing a lot of those countries. So, for the same reasons that I said, price pressures are going to be more difficult because of the EU deal. It'll certainly be better for the U.S. consumers to not have these tariffs go up, but it's just another piece of that really confusing puzzle for U.S. companies who are trying to figure out how do you plan this stuff going forward, because it really would be a reversal to say we are imposing higher tariffs this year on all of Southeast Asia than we are on China. It's a real big shift.
Another interesting thing about the China-US dynamic is that China hasn't bought any United States crude oil products now for 3 months. That's the first time in a long, long time, about 3 years, I believe. Do you see any negotiation bearing fruit in terms of access for US energy companies in China, or even stemming the fentanyl trade?
That one would be beyond my scope here. I mean, I think if you look back at the phase one deal during the first Trump administration, things can ramp up quickly in terms of purchases on ag or energy, and ramp down just as quickly. And so it is presumably a part of those conversations, but we'll have to see where those go.
Suresh, just finally, Daniel pointing out there that things are still very uncertain, a lot of moving parts here, and you mentioned volatility as well. With that in mind, what's your allocation to havens like, and where do you see the gold price heading?
Absolutely. So we think markets could remain volatile. That's why investors need to have some hedges in the portfolio. And gold is the best hedge at this point of time. Last couple of months, we have seen a consolidation. We think it's going to go higher. We are still looking at gold prices going to 3,500 and potentially higher, given that economy is going to slow down. And not to forget that Fed is still going to cut rates by 100 basis points. The other investment clients or investors can look at is still the IG bonds. I know bond yields have not really come down in the last couple of months because of the trade deals that are being reached. But I think eventually, as the economy slowed down and Fed cut rates, yields are likely to fall. So I think IG bonds at 5% yield, still a very good investment in the portfolio perspective.
All right, Dan Anthony of Trade Partnership Worldwide and Suresh Tantia from UBS Global Wealth Management. Thanks for joining us today to unpack that US-EU trade deal and also what we might expect from the US-China deal, likely to have that deadline delayed today. We have more ahead. This is Bloomberg. Got some breaking news. Elon Musk on X confirming a Bloomberg scoop that Samsung will produce chips for Tesla in a deal worth $16.5 billion spread over a period of years. There you see Samsung shares responding very positively to that Bloomberg story. Elon Musk confirming that deal is taking place. Samsung will produce semiconductors for Tesla in that big deal. And yeah, that's putting a rocket under Tesla stock. Samsung stock at the moment. Also get you across an alert from the acting Thai Prime Minister, who is confirming really that Malaysia is going to be hosting peace talks between Thailand and Cambodia. Those two countries enduring border skirmishes at the moment, and the United States and China will be attending those talks as well, although Prime Minister Phum Tham saying don't trust Cambodia's sincerity when it comes to ending that fighting. So Avril Hong is joining us now with more on this story. So Avril, just getting the latest there about confirmation. Peace talks will take place in Malaysia. President Trump also pressing for a ceasefire, dangling trade deals as a possible carrot as well. So where do we stand on the peace talks?
Yeah, I think it's perhaps not a very good sign that the Thai army saying just hours before the ceasefire talks are set to take place in Malaysia that the fighting at the border with Cambodia continues, or that the acting Thai Prime Minister doesn't seem to trust the sincerity of the Cambodians to put an end to the conflict. So the question is the extent in which both the US but also China can pressure Thailand and Cambodia to end the conflict. And indeed, we've been hearing how Trump has been exerting trade pressure to end a border clash. This is, of course, something we've been seeing earlier in the year in the instance of India and Pakistan. So sort of applying the same to a border clash in Southeast Asia this time around. He spoke to both the Cambodian and Thai leaders separately, and the message essentially was there can be no trade deal if the fighting doesn't come to an end. And we are expecting the US side to play a sort of mediation role. Marco Rubio has talked about how the US State Department officials are in Malaysia to assist with peace efforts. On the Chinese side, as you know, it has been increasing in clout in both Thailand and Cambodia in recent years as the US kind of steps back from the region. The Cambodians and indeed the Thais have sort of confirmed the Chinese involvement in the talks this afternoon. It's not seen as playing a direct role or exerting direct pressure to end the conflict. It could play more of a background role at this stage.
So what's the current position from Thailand and Cambodia when it comes to putting an end to this conflict?
Yeah, Paul, I think it's really interesting how at this stage, given how it's such a critical juncture, just a few days ahead of the August 1st trade deadline, that I think neither side really wants to antagonize Trump. They are both open to a ceasefire, perhaps more so the Cambodians than the Thais, because Cambodia has talked about how they're open to a complete cessation of hostilities, that it would be unconditional. The Thais, though, sort of attaching some conditions to this. They want a withdrawal of troops, for instance, and a bilateral resolution. And this is despite the incredibly high economic stakes for Thailand. As you know, its economy has already been lagging earlier in the year amid the slow recovery in tourism, and the political conflict or political crisis that's been sparked by the border conflict is also not helping either. So a lot at stake here. Paul.
All right, thanks very much for that, Avril. Still to come, our exclusive interview with Alibaba Cloud founder Wang Jian, sharing his views on the future of AI in China. Plus, we'll be live in Stockholm, where US and Chinese officials are gearing up for talks aimed at extending their tariff truce and easing broader trade tensions. This is Bloomberg. Inside, let's take a quick look at how markets in China are tracking at the moment. Broadly positive. We've just seen the CSI 300 come off the boil just a little. It wasn't positive territory earlier. A reasonable day for Hong Kong stocks, though. Better by 1/3 of 1%. Gaming stocks are performing quite well at the moment. US and Chinese officials, meanwhile, are set to meet in Sweden in the coming hours to explore a possible extension of their tariff truce and discuss other ways to ease trade tensions. Let's get live now to Stockholm and Bloomberg's Oliver Crook. So, Oliver, a potential delay in the works. I guess the read-through is that this is probably a positive sign. What does it mean?
Yeah, the U.S. administration is wanting to talk up recently the progress that they have been making with the Chinese delegation, and that is sort of wanting to be embodied here by Secretary of Treasury Scott Bessent, who will be leading the U.S. delegation arriving in the next few hours, speaking with the Chinese vice premier a little bit later here in Stockholm in order to get an extension to that truce. And we understand from the Shanghai Morning Post, they were the first to report this, that truce, they're aiming to get another extension of about 90 days. Because remember, the truce that brought these sort of tariffs from China down from 125% down down to this state of 30%, which is where they are right now, was supposed to expire on August the 12th. So what they need to do is to get an extension and start to make material progress on some of the sticking points to actually get a full trade deal with China. The things that are still in the crosshairs of the Trump administration is, of course, this question of fentanyl and precursors. There is the question, of course, also about getting the rare earth metals. So they've made a breakthrough there and getting the AI chips from the United States over to China. But there are other sort of longstanding issues that the Treasury Secretary has said he would like to make progress on, namely fossil fuel purchases from Iran and Russia. Could they begin to put a little bit of pressure on China there, get to some sort of agreement? And, of course, the sale of TikTok, which Trump says that there's a buyer in the United States, but China still needs to sign off. So it's a really sort of full agenda for these two leaders to chat about over the next sort of 24 and 48 hours. Remember, last time they went late into the night. So we'll be sort of waiting here until Scott Bessent arrives in the Chinese delegation for what could be some protracted trade negotiations to get that extension nailed down, which would have expired on August the 12th.
It's interesting watching the progress of this. A lot of other nations getting hardball tactics and, levies of about 15%. China, meanwhile, is getting extensions and a rather more gentle treatment. To what degree does China's dominance of the rare earths sector give it a whole lot more leverage here?
Yeah, I think we've learned probably that there are two things that can exert pressure on the Trump administration. One of them was China in these trade negotiations. We saw that the Chinese were able to bring to bear a lot of their influence on the rare earth metals, the processing and the access that they have got, and the sort of crucial bit of the supply chain for the United States that really China monopolizes. The other, of course, is the bond market, and that has been the sort of effective check on the Trump administration on some of the more erratic or the more risky sort of trade behavior. But it has created a scenario in which there is a possibility to put influence on the Trump administration. That is what we saw in the case of China. It is what we've seen in the case of markets. It will be very interesting to see how the market receives some of the trade deals that we had announced over the weekend, namely the ones with the Europeans, which I think overall will probably be closer to some of the more bullish cases that people were watching from business and from market commentators for that 15% levy, when by the end of this week the Europeans were facing 30%. They got that down to 50% basically over the weekend in Scotland with Donald Trump and Ursula von der Leyen.
You mentioned there that China's purchase of U.S. crude oil products pretty much ground to a halt. But how's this tension going to work between the U.S. wanting China to buy more of its oil and stop buying oil from Russia? Is China really going to sacrifice its no-limits friendship with Russia?
I suspect that is going to be a tougher sell to make to the Chinese at this stage. And I think also in the sort of light of the EU deal that we got yesterday, part of that deal, Paul, is buying $250 billion worth of fossil fuels for the Europeans from the United States, 750 over the next 3 or so years. We should say that when you look at the actual numbers and where a lot of the LNG in Europe already comes from, in Germany, which is one of the big energy consumers in Europe, 92% of that crude, of that LNG, I should say, comes from the United States. So there's also a question of whether or not there is that kind of volume of energy in order to sell right now across the world. Of course, the United States makes very sort of big news of the fact that they are the biggest sort of oil producer in the world. They do generate an awful lot, but a lot of those cargoes will be spoken for. So you have to really look into the details as to whether or not the U.S. can really fill all of that sort of demand that they're talking about wanting to fill across the world.
All right, Bloomberg's Oliver Crook there. Well, the founder of Alibaba's cloud and AI unit says 90% of the technology and services that have sprung up since OpenAI's ChatGPT could be gone in under a decade. Bloomberg's Asia Tech correspondent Alibaba Cloud joins us now for more. So, Belle, tell us more about your exclusive interview with Wang Jian.
Yeah, this was a really wide-ranging conversation over the weekend. We spoke for an hour, very much in depth about Dr. Wang's vision for where AI goes from here. I mean, he is a true visionary. He is the person that pitched the idea for Alibaba Cloud internally way back in 2009. He actually was met with resistance on that initially. So that big question was, okay, if you had that sort of out-of-the-box lack of consensus thinking, what would you see next for AI as well? And he said that actually, as you said, that point around ChatGPT, ChatGPT, it created sort of a bit of a skew in the market, a bit of a bias, where it sort of pushed people in one direction, thinking about what AI can do, its capabilities. Actually, he said that the developers need to be even more creative moving forward and think about different ways or new ways to use AI instead. So that was sort of one of his main messages. But we also spoke about not so much US-China tensions. He didn't want to be drawn on that, but he did talk about the talent wars that we're seeing and the hundreds of millions of dollars that are being spent by companies like Meta, for instance, in Silicon Valley to try and attract the top talent into their businesses. We spoke about that, also the landscape for China's AI industry, how that's expected to evolve. But here are some of the highlights.
I would say as just like a single organization or single person, you really cannot go that fast for a long time, okay? You know, you collapse, okay? Like, you know, I can work in like for 3 days and without any sleep, but not anymore, okay? Not anymore, and you really cannot like work 30 days and don't have any sleep, okay? There's no way you can do that. Okay?
Work ethic in China is famous.
But I would say collectively, we can have a very fast iteration, okay? Like, so that's why I really like a stubborn mindset. So basically, you know, like DeepSeek could do something very fast, okay? And then we also have Queen, okay? And then we have Kimi, okay? So collectively, and we can push that fast. I think that's okay. Actually, that's what I think is important. Otherwise, why we need that population, okay? So that's why, you know, when people get together, and it's not just for, you know, competition, whether you win or not. It's basically, you can have the very fast iteration of the technology because of this competition, or because, you know, and you work fast this time, and you slow a bit, and then other guy move very fast, and eventually we slow down a bit, and if you're good enough, you can catch it again. And I don't think it's brutal, but I think it's very healthy because, and when we work with the people that is very competitive, that would make you much more competitive, because that was the way how I think the new technology would be invented. Yeah,
you're talking, I guess, about more of a marathon, not just a sprint race.
Yes.
Is there space, though, for new contestants to enter that race today?
I would say, at least for the AI, it's a marathon, because I think nobody could really see, you know, if it's a long journey, it's definitely in the very beginning, okay? So in that sense, you know, any short-term win is not important. And it's not like, you know, again, I want to say, this is a very important judgment, you have to, but I think we have to make that a judgment is, you know, whether any advantage you have today is a barrier for other people to catch up with you, okay? But personally, I didn't see any advantage you have today will become the barrier for other people to catch up with you, okay? It's just an early process to the next stage, okay? And so that's why it's very exciting time, you know, for that. Anything that at the early stage, anything that actually everyday new things happen, it's exciting time, especially for youngsters. Okay, yeah.
You mentioned Kimi from Moonshot and Alibaba's own model, DeepSeek. I mean, is there any of the small language models, the large language models that stand out to you in particular in China today?
Actually, I would say there's a lot, and but you really want to get to know by the other people. That's hard. China is really a country that benefits from the stubborn mindset. So I would say, if you look at the young people, you know, for at least for the people that I have chance to reach, they have a very good stubborn mindset. Okay, and particularly like in an area like Hangzhou, and also this area, this Yangtze that area. I'm not sure whether you know about some of the saying that in Hangzhou. I don't have the statistics, but it's basically the people talking about. So if you're counting the people in Hangzhou, and every 4 or 5 people there is a CEOs, okay. So it just means people just love to do some things. So it is fascinating, and I think it's still good for the.
I'd love to see that statistic: 1 in 5 on the streets of Hangzhou being a CEO.
Yeah.
No hometown bias for sure.
Yeah.
Okay. When it comes to building an AI model today in China, what's the biggest challenge then? Is it on getting it to market and getting that awareness and getting people to use it, or is it more on the building side?
And I would say the creativities, and the reason I said I really think I have an equation about what's the challenge we have in terms of that, and people always said, okay, the computing power probably is the barrier for us to do that. Okay, actually I don't think at this moment, long term, it is, but at this time I don't think it is. Okay. So, particularly in the last 6 months or 12 months, that's particularly true. That's what I want to say. Is why I say it's creativity. The foundation model from Queen and from DeepSeek are good enough. They are already much better than GPT 4.0. Okay.
I'm taking a look at the book here that you wrote about also the journey around on Alibaba Cloud and your vision for the business. And the foreword is written by Jack Ma.
Yeah.
And he says that the first time he met you, he was shocked by your vision of the future of internet technology, and also that he wished that you'd met earlier. What I find interesting, though, is that you actually had to convince him and others at Alibaba that the cloud was the right business.
Yeah, because, fundamentally, I would say, the cloud business is very different from internet business. Fundamentally, okay. So, but thinking about, almost 20 years ago, the core internet mindset is everywhere, okay. So for the cloud computing, it's not that fit in that sense. That's one thing. The second is cloud computing is very different in terms of business. I always say to my colleagues, I'm very lucky to working on it. The first is a technology, not like any other business. They start with business, and technology just help the business, okay. But the cloud computing not that case. So you have to have the technology first. That's the key. So it's a technology. The second, not every technology could become the business, okay. Actually, I always say only 1% technology could be on the business. So actually 90% technology, just technology, okay. So we're very lucky, okay, it's a business. And more important, it's a lasting business. So thinking about a lot of business, have this life cycle, every 10 years, you have to thinking about another opportunity, okay. But cloud computing is a very good business. It could last for another 50 or 100 years, okay, because the computing is so fundamental. So when we use an analogy about between the electricity and the computing, it means a lot of things, okay. So electricity is a lasting business. It will be there for another 100 years, okay. So that's the hard part for the people to really understand. So at the very beginning, it is hard, yeah.
I think something that we see right now is certainly money that's being directed at strong talent.
Yeah.
And there's stories, of course, in Silicon Valley we see of people that are getting hundreds of millions of dollars. And what do you think about that?
I think it's. I don't think it's the, let's see. It's a typical way of doing things. Okay, I would say that. The reason is very simple. With one example, when I started the Alibaba Cloud, the first thing I did, that was in 2008. The first I did was with the Silicon Valley, and to try to get talent. Okay, and after talking to all the people, and you realize actually we don't have much talent there because it's new.
Okay.
So, and also with some of the talent, it's just too expensive. Okay. And to experience basically means, okay, you don't know whether the cloud business is there. Why need to hire these people? So it's really about innovation. So when you are in the early stage of innovation, I don't think talent is a problem, because the only thing you need to do is to get the right person, not really the expensive person. Because if the new business, if it's true innovation, that basically means it's talent. Nobody care about them. Okay, otherwise we're going to working on that. So for today, what happened for the Meta is because they are very much focused on the existing success of the business and existing establishment of technology. That's my view. Okay, so I think we have a tremendous opportunity to look at technology nobody knows today, and these are talent, but these are I can't say it's cheap, but it's it's available for you. Okay. So that's really about the vision, where you want to go. And there's a lot of similar things, happened during the last 20 years or so. Whenever everybody knows that these are talent, and it's better for you not to get in. And at least that's not new. That's my so like personally that I hired Zhou Jin. Now he's the leader for the Queen. Okay, you probably met him, when you were in Hangzhou. I personally interviewed him. 15 years ago, and we got talent. Now he's leading the Queen. Yeah, but so that's
so there's not really any justification. Then it sounds like you think for such
so I
salaries.
Think that's not what the I'm sorry. What happened in Silicon Valley is not the winning formula. That's what I believe. Yeah.
So as you said, that was a really wide-ranging conversation with a man who founded Alibaba Cloud, took it from just a handful of servants really supporting the e-commerce division into what is now an industry behemoth and one of the biggest as well in the world.
So, Belle, sticking with the topic of AI, you are there at the World Artificial Intelligence Conference in Shanghai. What have we heard from the Chinese premier there?
Yeah, that's right. Premier Li Qiang was speaking here on Saturday. He kicked off the event with a really big focus on AI governance. So I think it really speaks to sort of the US-China tensions. No, he didn't single out Washington in particular, but he did say that there is a need for yes, maybe some job losses, there will be global upheaval, but nations need to work together. And also as well, AI can't just be dominated by a handful of nations. So his play is really on bringing nations together to that end. They actually announced the launch of the World AI Cooperation Organization. Again, it's about bringing countries together ostensibly to share their insights, share their talent. Of course, as well, I mean, this sort of play that we see, not just from China, but also the US, to dominate the governance and standards really talks to where competition around AI is headed. It's no longer just about AI infrastructure.
Belle, of course, while you're speaking there, you do have a couple of robots behind you nodding in vigorous agreements. What's the story there?
I mean, yeah, okay, we can see these guys. I mean, they're just really some of the few robots, a drop in the ocean, really. We are in a conference here, a hall that is just full of different robotics companies. I mean, it talks to how China is really leading, I guess, or at least among, I mean, if the US is maybe number one with Tesla, that's at least what Elon Musk would say, certainly positions 2 to 10 or around about as being dominated or risk being dominated by Chinese companies, because there's just that much innovation going on in humanoid robots. Is that going to be something that also sparks the need for industry consolidation? Certainly that's one of the key takeaways. Actually, I've heard here today, we were speaking with Monolith Management, for instance, Tim Wong earlier this morning. He's the co-founder and CAO, and he just said, given how much competition there is now in this space in China, you will start to see some closures or maybe some consolidation in the next few years as well.
All right, Bloomberg's Asia Tech correspondent Annabelle Drill is there in Shanghai. Let's check the Indian markets just before we head to the break. Been trading for just a few minutes now. Let's take a look at the bank index in particular. A little bit softer. I mentioned that because a number of big banks did report quarterly earnings after the close on Friday. So we're seeing the Nifty Bank Index off by about 0.25% at the moment. Broader indexes also a little bit softer. That's something we have seen around the region. A lot of the action has been focused on what's going on with the Chinese and European stocks today in the wake of that US-EU trade deal being sealed and the likelihood that we're going to see an extension of the deadline with China. There will be some other stocks to watch in India later on today as well. We will be hearing after the close from Bharat Electronics, Gale India, Adani Green and Adani Total are going to be among those companies scheduled to report earnings today. And you're seeing Tata Consultancy there losing a little bit of ground at the moment, off by 1.5%. We've just had the news that Tata Consultancy is going to be slashing 12,000 jobs globally, you guessed it, amid this tech shift. So Tata Consultancy right now off by about 1.5%. Stay with us. We have more in a moment. This is Bloomberg. Here are some of the global stories that we're following. Meta CEO Mark Zuckerberg has named Zheng Zhao the chief scientist for its new super intelligence AI group. Zhao joined from OpenAI in June and was part of the team behind the original version of ChatGPT. The AI researcher will help lead Meta's new group aiming to build models that can perform tasks as well as humans or even better. Bloomberg has learned that Samsung Electronics will produce semiconductors for Tesla. The company announced a deal worth $16.5 billion that will run through to the end of 2033. Tesla CEO Elon Musk confirmed that on text. Samsung's Texas fab is going to make the EV maker's next-gen AI6 chip. The contract win comes as Samsung moves to regain ground in chip manufacturing, with its share of the global market slipping to 7.7% in the previous quarter. Off the back of that news, we are seeing Samsung shares rising pretty strongly, better by more than 3% at the moment, failing to offset broader weakness in the Kospi, though off by 0.2%. It's really banking stocks that are weighing on the Kospi today, financial shares falling after a regulator meeting prompted by the president's criticism of the sector's over-reliance on interest income. So Samsung shares not doing much to hold off a wider decline on the Kospi. Elsewhere, we've got Asia benchmarks pretty much mixed at the moment. Chinese equity markets just slipping modestly into negative territory, and we are, of course, waiting on news of a possible delay to US-China trade talks. Before we go, here's a look at our guests for tomorrow. Zuma Wealth founder Terry Spath that joins us with her insights on markets and investment strategy. We're also going to speak to international trade policy expert Maze Alkolsel. That's it for Insight. Horizons Middle East and Africa up next.